Well, good morning. At least good evening from Bali and good morning to you. Welcome to the Fox with Stock Show. I'm Buddy. Let's get started, shall we? Let's see if the camera works today. Hey, how's it going, everybody? Excuse me. I know we finally got a front camera. How cool is that, guys? Welcome back, Gage. Welcome back, everyone else. Got a couple picks for you guys today. We're still looking for some more. Let me know who's here this morning. Say hello in the live chat room. And let me know if you want to talk about the wheel strategy, how to do it, what it is, how to look for it, that type of stuff. And how many of you are already wheeling and don't feel like you want to go through an explanation video and want to get right to looking for the deals. Let me know in the chat room so that I know what type of audience we've got today. Hello, David. There's a bit of a chat delay as well. Do keep that in mind. If you type to me, I don't know how long it takes for your message to reach me, but I think it's about a 5 to 10 second delay before whatever I say reaches your ears and your eyes. All right. Hey, Chester. Hey, Guy. Hey, David. I already said hey, David. Welcome back. You can't hear you very well. Okay, thank you. I'm going to turn the gain up a little bit. If not, maybe I need to move the microphone up a bit. How's that? Oh, you say, okay, you deleted that. Can you hear me okay? Let me know if the music's too loud, if the gain is too low, or maybe I even have to move the microphone. Audio is always a bit tricky on these things, so everyone let me know. Chester, David, Gage, let me know how well you guys can hear me. Excuse me while I blow my nose. All right, are we good on the audio? Let me know in the chat room if we're good or if we're not good. If the music gets too loud, let me know. It looks like mostly regulars today. We've got 6 people watching. I know 1, 2, 3, 4 of you. If you're new here, thank you, David. Thank you, Guy. If you're new here, I've got 2 of you that might be new. If you don't know what the wheel is, you have to let me know in the live chat. Otherwise, we'll probably skip it or we'll go through it very quickly. All right, let's get started. It's already 8:33. It's only 3 minutes. I do want to talk quickly about why I do this show because you know what? I don't like being that public. I don't like bragging about my returns, and honestly, it's probably there's some reasons to not let people know what you do and how much money you make. But I'm taking the risk and I'm dedicating myself to help curing aging. Johnny says he does not know the wheel. Okay, Johnny, for you, we are going to go through that today so that you make sure that you pay attention, okay? Don't leave us. But I want to talk about quickly a higher purpose. And that can be spiritual or non-spiritual. It's up to you guys. But at a certain point, if you follow me anyway, I believe that you will reach financial independence and no longer need an employer, and that's going to free up a tremendous amount of your time. And there comes the question what to do with your time and what to do with the money that you have. And obviously you can keep making money and keep improving your lifestyle, but is there anything else that you would like to do with that? And I've dedicated myself to the most important goal that I could come up with, and I did think about this for a very long time and think about what would bring me happiness as well as what would be the biggest impact in the world possible. And for me, it's curing aging. I'm 38. My body is not the best. I don't think I'm going to make it to 100 unless we improve technology. I really don't know how long I will make it, but as you get to this age, you do start to notice what is deteriorating and how fast things are deteriorating. And it definitely scares me, but at the same time, if people were to live much longer, I think that they would give back to the community in a different way. Actually, I should have made that presentation a little bit bigger there. Okay. I think people would give back to the community more. I think they would teach their children and grandchildren more. I think society itself will improve. I think if you cure aging, people will be more adamant against pollution, against poisons into their rivers and their lakes and their oceans, and we would not tolerate this type of behavior because despite curing aging, we could still be dying or or becoming unhealthy because of what we're doing to the environment. So if you're if you're very green-minded and environment-minded, I'd encourage you to think about what an impact it would make if we cured aging. So there's this organization called sens.org. I've put it up here in the top left. Okay, and they are dedicated to developing, promoting, ensuring the widespread access to therapies that cure and prevent diseases and disabilities of aging by comprehensively repairing the damage that builds up in our bodies over time. So it's started by this man, whose name is Aubrey de Grey, who is actually a programmer initially before he got into biotechnology, and he decided to take a different look at aging and ask, what really is aging? And he came up with the idea that was revolutionary at the time, or at least expanded on the idea, which is now becoming more mainstream, which is the idea that aging is simply the accumulation of damage and byproducts in our body as we go through life. As you metabolize and convert oxygen and energy and make new cells, little bits of damage and little bits of floatism starts to accumulate, and that's what's actually causing the effects of aging. Because otherwise, we wouldn't have to age at all. So the reason I made this channel is so that I can find more people, teach them to invest, and I can sort of expand my reach, both socially, and obviously if I can improve my money, I can give back and help with curing aging. So that's why I'm doing this channel. This is why I'm publicly speaking about what I do. Otherwise, I'd rather probably just be private and do it on my own and not let people know how much money I make and stuff like that. So with that out of the way, and sorry that took so long, that was like a 5-minute spiel or a 3-minute spiel that could have been shorter, but that was the important topic I wanted to get across today, is why I'm doing this. So with that said, Mr. Johnny, we are going to talk about the wheel, what it is, why it's amazing, and why it's, I think, one of the, if not, I actually think it's the best strategy so far for beginners. If you're a beginner in option strategy, I would recommend the wheel strategy. I would recommend the wheel to all of my friends, all of my family, okay? And then once you get familiar, once you've used the wheel month after month and you really understand the mechanics and the numbers behind it, then you can start to add more tools to your tool belt and not just do the wheel, but to do credit spreads, bull spreads, call spreads, put spreads, and then move on to bull ratio spreads and all these other things. But the question a lot of people have is, where do you start? I mean, there's 29 different combinations you can do with options. How do you start with something that's high probability, will give you the tools to learn to do other trades because of what you're learning while you're doing this trade, and what I believe is incredibly safe? So with that out of the way, give me a drink. Let's get started. So the wheel is, as this diagram points out, it's actually very simple. There's really only two actions here. There's two decisions and two actions. So you start with a cash covered put. You find a stock that is good, that you like, that has what I call good fundamentals. They're not going to go, they have no risk of going bankrupt in the next year and hopefully 2 years, okay? And we can get into that a little bit later. And then you sell a cash covered put. By the way, they do have to have volatility. So you need a good company with volatility. You need both of those things to come together. When you find those things together, you can sell a cash covered put. Now, I'm going to go ahead and just jump into Tastyworks real quick, because I think that's going to show you how easy this is to sell a cash covered put. So one of the trade recommendations, or one of the things we're going to look at today, is RIOT. So let's use them as our example. Okay, Johnny, I hope you're still there, still paying attention and with me. Okay, RIOT is currently trading at $43.28. So let's skip ahead, and let's say you've already done the research and you like RIOT. They have 131% IV, that's implied volatility. So this is a volatile stock, okay? So we have two things. We have a good company, we have volatility. Remember, you need those two things, okay? Currently trading at 43, and if you look at it, here is your bid column. You could click on any of these bids on the right-hand side to sell a put, and that is how easy it is. So, for example, I'm not recommending this. I'm just saying, for example, you could sell the $34 put for $2.04. What does that mean? It means you will make, right here, $204 as long as you are not forced to buy the stock. You're forced to buy possibly at expiration if it's below 34. Usually if it's below 34, you're going to get exercised. That doesn't mean you lose money. Let's be very clear about that. Just because you get exercised at 33, 32, you would not lose money here, okay? So let's go through some of the basic math for you real quick. If you were to get $2.04 in premium for every $34 at risk, okay, you would be getting a 6% return, or 6% ROI, ROR, return on risk, return on investment, whichever abbreviation you prefer to use. You would make 6% in how many days? 25 days. 25 days, not 365 days, not a year. We're talking 6% in a month. That is insanely good, okay? This is I would call this high return. Some people wouldn't, but this is clearly higher than what you're going to get with most investments or off-the-shelf investments that you'd get from a bank or a mutual fund or any of these other things that people like to invest in. This is the reason why we trade, why we risk our own capital, and why we take the time to do this, is because instead of making 6% in a year, you should be making 6% in a month or 4% in a month, right? So this is why we do this, okay? Now, let's go back to our diagram, okay? You start by selling the cash covered put. Then what happens? You wait till expiration. The example we gave is 25 days out. So in 25 days, the question becomes, do you get assigned the shares? You will not get assigned the shares if the stock price is above 34. Above 34, you will not get assigned, which means you keep the $204 and you enter the profit and repeat, and then you just go back. You sell another cash secured put, and it could be on a different stock or the same stock, okay? You reanalyze the situation. You look at the company again, you look at the implied volatility again, and you look at other opportunities. You choose where to put your cash again. So you're just starting all over again, okay? And if it is assigned, if it falls below 34, you end up owning the stock. What do? Well, you could either close it out right away if it's between 32 and 34 because there's profit built in, or if it's at that or below it, you could sell a stock covered call. Stock covered call. CC versus CCP, okay? Just covered call means the same thing. You cover a call with stock. So we don't need to say the stock part. You're writing a covered call. CC, okay? And it's the same process. I'm going to go back to Tastyworks here, and we're just going to use an example, okay? Right now we're at the money. It's going off of Fridays. At the money right now is 43. Although this chart is going to show you 41.42 because it's not taking in the extended hours, okay? So let's pretend that the stock fell down to 34 and you were selling at the money. You might, okay, we're hypothetical-ish, okay? You might get between $5.70 and $6.10 per share. It'll probably be lower than that because you're at a lower price, okay? But just in theory, you could turn around and sell the covered call, and let's call it $5, okay? $5 per share on $34 shares, okay? What does that work out to be? 5 divided by 34. It's an insane 14.7%. And I'm being hypothetical because it's very hard to know what your cost basis and all this other stuff is going to be and what the implied volatility will be in the future for these bids and stuff like that. It's very hard to plan ahead for that. But this is just saying in theory, okay? In theory, okay? Now, you can also go above the money. So let's say it was currently trading at 43 and you got assigned. You don't have to sell, 34. You don't have to sell right at 34. Maybe you sell at 35, 36, 37. This gives you a combination of premium and appreciation. And you have to play with those numbers to see what's good for you. All right, let's continue on with the slideshow. Let me go back to that. And let me know, Johnny, if what I'm saying is making sense, if this is clear, if there's anything that's really confusing right now before we go ahead, let me know how we're doing. While you write that out, I'm going to continue talking. The wheel is a management strategy. It is not a spread. It is not an iron condor. It is not a put spread. It is not all these other things. It is a defined strategy for managing what happens, okay? It's important to understand that. And the reason it's important to understand it is if you don't follow the steps, the strategy will not work, okay? I don't know if you're a football fan, American Gridiron fan, okay? If you throw to your linebacker, it's not a good strategy, probably gonna drop it, okay? If your running back is supposed to go up 20 yards, then cut left, and he never cuts left, and you throw the ball to where he should have been, obviously the strategy doesn't work, okay? When you don't follow the strategy, strategies fail. When you don't follow the steps, okay? Okay, how to fail with the wheel. Number one, you're lazy and you don't do any fundamental research. I wanted to talk about, what was I gonna say? Okay, there's some people that like to trade using purely technical analysis. They skip the fundamentals. I'm not saying anything terribly bad about that, but I will say this. If you exercise an option early instead of flipping it, so let's say it had $5 intrinsic value and $1 extrinsic value, and you decide for some reason to exercise it early, you would be taking that extrinsic value and you'd be throwing it away. You'd be throwing away $1 per contract. And that's, to me, is like the same thing. If you skip the fundamental research and you make a wheel trade using only technical analysis, you've taken that fundamental value and you've thrown it in the trash. Don't skip the fundamental research is all I'm really trying to say. Number two is greed. You prioritize good setups or good ROI over good companies. Remember I said you need a good company and you need good ROI and they need the match. So if you don't match them and you just say, well, this has got really high ROI, so I'm going to do this, that's when you get into trouble. Number three is fear. You manage too soon or you manage the wrong way. Remember I said you have to follow the steps. It's a management strategy. Number four is greed. Maybe you find this really good trade and it is a good company and it is a good ROI and you put those together, but let's say you had a $10,000 account and you risk $7,000 on one company and one option with one expiration date, okay? That is a huge position size for your account. And in the event that goes wrong, congratulations, you risked too much and now you gotta dig yourself out of it. Don't be that greedy. Number five is lazy, too much sector risk. This is the one I'm really guilty of, too much sector risk. Always looking to expand to more sectors, which is why I no longer look for 5%, I now look for 4% so I can be involved in more sectors. Okay, how do we succeed with the wheel? Number one, be patient, do the fundamental research, look for good companies. Number two, find that balance. Good setup, good ROI, and good company need to be matched together. Number three, trust in the system. Trust means trust in the system. Manage properly, step by step. Not too early, don't panic. Sometimes you sell a put, the price is here at 33, and then it dips down to 23 in the middle of the month. If you close or roll now, you're gonna lose money. Sometimes it comes right back up again. Option expires. You have to follow the steps. Number four, discipline. Position size fits account size. You don't risk $7,000 in a $10,000 account. You go look for smaller trades or you don't trade high multiples, okay? Number five, balance. Select companies in different sectors. Remember, that's what I'm fixing this month. This month, this quarter, that's what I've been fixing, is picking more sectors. Give me a break here. I gotta take a drink while you guys read this a little bit, okay? And most of this is for Johnny. Thank you guys that are coming back. If you're new, let me know in the live chat that you're new. And thank you, Wayne. Glad to see you. All right, day trading. I do not promote day trading, and many of the people that do are scamming you, okay? Day trading is a job. It is a day job. It is a very profitable job. I'm not knocking it if you take it seriously and you get good courses, etc., 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 okay? What I am saying, if you're an investor and you're trying to put your money to work and free up your time, day trading is not the solution. And it is over promoted. I'm just saying it's over promoted. There's tons of scam books and scam courses and scammy people that promote day trading that are not going to give you the information you would get at a hedge fund or a proprietary fund, okay? They're not giving the real information. And even if they did, I want you to understand this very important thing. You are moving from one job to another. You're moving from a boss that takes risk with his assets on you to a day trading job, which is you risking your own assets, okay? To me, you're not, if you understand cash flow quadrant, you're not an you're not an I if you're doing day trading with your own money. You are an S. You are a self-employed slave. Congratulations. Hey, Chris, thank you for attending. I'm glad thank you for telling me that you're new to the wheel. This explanation video is for you. Excuse me. Okay. I gave you guys plenty of time to read this. The most important key takeaway from this is investing should be lowering your time and increasing your income. If it's increasing your time and increasing your income, that's not investing, that's just career or skill improvement. You want investing to free up your time, okay? Moving forward, let me just double check this. Yeah. So basically, if you're day trading, you bought yourself a job. Nothing wrong with that, just be clear about it, okay? Why wheel? Number one, convenient. You can do it from anywhere in the world. I'm in Bali, you're wherever you are, okay? If you wanna move someplace else, you wanna move to Bali or Colombia or Spain or Thailand, you can then leverage exchange rate. You can live cheaper, which gives you more income to invest, okay? Which causes your account to grow faster. I have a nice lifestyle definitely compared to what I used to. And by the way, just so you know, I pay the same amount of rent. I was living cheaper. I was living 4 times cheaper than I am now, but I wanted to increase my comfort level. I was making good income. I decided it was time, okay? I am paying $700 a month, which is what I used to pay in Las Vegas and what I also used to pay in San Francisco for a tiny box. But in Las Vegas, I had a decent house away from the strip, and it was nice, but we had a community pool. I didn't have a private pool. I had a nice garage. It was an older home, but I was paying $700 a month. In Bali, I'm paying $700 a month for a private villa with my own pool, a gazebo, a beautiful outdoor kitchen, a beautiful view of the rice fields, okay? There's lots of things, and you can go cheaper if you want, you can go higher if you want. There's people that spend thousands of dollars a month on rent in Bali. There's people who spend $140 a month on rent in Bali. It is still a studio apartment with air conditioning. If you give up the air conditioning and move away from the tourists, you can even get it lower. I don't know why you'd want to do that, but you could get it lower if you wanted to. That's the power of investing and trading done properly. You can do it from anywhere in the world. Number 2, and you can do it with the wheel, okay? That's why I promote this, why I tell my friends and family about this. Number 2, time, low time commitment. If you really needed to, you could get down to 1 hour a week. I would actually recommend 1 hour a day, not 1 hour a week, okay? But you can get that time commitment down. Number 3, it's repeatable. You can find good setups every week. Guy, I see your question. Chris, Oscar, I see your question. I'll get back to you in a second, okay? Compound growth. You can expect to make 1, 2, 3, 4% a month. I should probably take out that 5%. 5 is a bit risky. Hard to find lots of sectors if you're aiming for 5%. Number 5, downside protection. You can get 10 to 20% crash resistance, downside protection. I'll explain that in the math. Probably the most important word in this entire slideshow, I think, downside protection. Number 6, safe. You limit your trades to good companies. You're not trying to take risky trades on pump and dump companies. Number 7, high probability. Every trade that I do is certainly above 60%, and most of the time is between 70 and 80% pop, probability of profit. Hello, puppy. My little puppy is so crazy. She learned how to figure out how to open doors within the first hour here. I have these big sliding glass doors. She does not care. She opens them. It's crazy. All right, let's answer those questions real quick. Once I stop choking. By the way, my braces hurt today. I had one of the braces broke, and she tightened the bottom braces, and very painful today. Oscar says, how many simultaneous wheels do you recommend for a $25,000 account position size? I don't know if I feel comfortable recommending position sizes to other people, but the way I do it, the way I look at this, is I think about this in terms of month. How many different positions in a month do I want to have? And I started, by the way, with the same size as the $25,000 account. The way I think about it is I hope to find 1 or 2, maybe 3 good trades a week. If I'm getting more than that, then maybe I'm not doing enough due diligence, DD, okay? If I'm getting less than that, maybe I'm not looking hard enough, or maybe the market is not right, okay? So I'm looking at a few trades a week, I hope that answers your question. I don't know if I want to get involved in telling people the right positions for their account size. That sounds like it might be financial advice, okay? I like to speak from my own position and what I do. I'm looking, I guess you could say I'm looking at by the end of the month, maybe to have up to 10 positions. And there's a reason. I don't want to go above 10 positions, 10 completely different companies, because then it becomes harder to track the information flow, the news, the research. I don't like to have more than 10 stocks at a time. And maybe that'll change as I gain more experience. Let me know if that answered your question, guys. Let me know how we're doing. It's 8:56, so I'm going to have to speed through this. But let me answer this question. Guy says, I'm curious, how do you use the money in Tastyworks to pay in Bali? I'm not sure I understand the question. Number one, I actually try not to take money out of my trading accounts. I like to be in a position of putting money into the trading accounts. And I had a separate savings account to pay for things. Although at some point, that's going to run out and I would have to start draining my trading account or find another source of income, which hopefully this video will lead to as we start to sell signals and other things. So let me know if that answers your question. Maybe it didn't. Number one, you take money out of the Tastyworks account, you put it in your bank account, and then you transfer it over here. You can transfer it to a bank account here. You can transfer it to yourself with Western Union, or you can take it out at an ATM. ATM fees are a bit high. It's actually cheaper to do it in Western Union. Guy, let me know if that answered your question. Let me also speed through this because we've only got 4 more minutes before I want to move to the next section where we're going to talk about trades and move away from just talking about strategy. By the way, we've got 12 people watching right now. I've already given you guys literally hundreds of dollars worth of value if you were to pay for courses. Do me a small favor. Click like, subscribe, bell, all that stupid crap that you have to do on YouTube to fix the algorithm and to keep seeing my videos because that stupid bell pisses me off, okay? And most importantly, consider sending this live stream and these replays to your friends. That's the best way. That's the best way, okay? Guy says, I'm referring to transfer commissions. I'm curious, how do you use the money in Tastyworks to pay in Bali? I'm not sure I understand what you mean, Guy. Let's get back to that in a few minutes. I'm going to go continue quickly now through the rest of the slideshow. All right, so as you guys probably know, there's 2 sides of options, calls and puts. Calls is when you expect the stock to go up. Puts when you expect the stock to go down. However, we're on the selling side. It's important to understand that when we sell a put, we are selling a contract. We're not selling the shares. It's very confusing if you're new, okay? We're not selling shares. We are selling a contract for shares. Where does that contract come from? It's being created at the moment that we're selling it, okay? It's a standardized, fungible contract. You can replace it with any other similar contract. We are creating it, and we are creating it from the seller side, and somebody else is buying it from us. So the broker is not getting all of the money, the premium, from the buyer. They are simply the middleman. They are matching buyer and seller. We are the seller. So when somebody else buys, that money goes to us, and we give a promise to the seller. The broker takes a fee, and so does CBOE, Chicago Board of Options Exchange. All right. Okay, difference between buying and writing options. When you buy, you're creating leverage, or you're creating insurance and shorting the market, shorting a stock, I should say. Okay, you're taking a high risk for high return strategy, but high risk means low probability and time is against you. Very important to understand. Time is against you when you're buying an option because time is constantly running out. And it's not good when it runs out when you're buying an option, which means the inverse. When we're writing an option, we're taking a low risk, high probability situation. We're earning a medium return. I wouldn't call it a small return. 5, 6, 4, 3% a month multiplied by 12 for a year. That doesn't sound like a small return. That is a medium return, okay? You're earning monthly premium when you do this, and you have downside protection. And then, very importantly, time is on your side. You put time on your side. I cannot stress, I don't know if I can put in the words how important that concept is. Just because somebody is right and a company is going to go down in the future doesn't mean they're going to get the time right. That's why it's so hard to short the market, why selling puts is so great. Okay, so that's the wheel strategy, guys, from a high level perspective, and it'll make more sense as we actually get into Tastyworks and start putting on some trades, okay? We start by finding a good company. We write the cash covered put. We wait to see if it gets assigned. If it does not get assigned, then we simply do it again. If it does get assigned, we now own the shares, which we bought at a discount. I'll show you later, okay? And then we do the same thing. We write a covered call. We earn monthly premium on that. If it gets exercised, we lose the shares. We're right back to cash again. If it gets exercised, this is good. The stock went up, and we own the stock. It's good. And now we're selling the stock. By the way, if you already know how to trade, think of it like this. When you sell a cash covered put, it's kind of the same as putting on a limit order and getting paid until you buy shares, until the limit order goes through. So if you wanted to buy a share 15% lower than market price, and you were going to put on a limit order for 30 days and it didn't go through, wouldn't it be okay to earn $200 a month when your limit order doesn't get fulfilled? Think about it. That's what you're doing when you're selling a cash covered put and why it's so good and so amazing. All right, that was our old example. We're going to skip that. Okay. These are some of the sectors I'm talking about. Okay, last little thing, it's 9:01, we got to move on. There is an order of operations to this. Number one, figure out your worldview. Do you think GDP is high? Not only do you think, go do the research. Go look at the ISM, and I forget what the Euro one is called. Go look at the ISM and the manufacturing sectors. Is GDP going up for the US, the Eurozone, and China? That's number one. Gives you your worldview. Are you bullish or bearish over the next 6 to 12 months? Next, check out your sector view. Is the sector that you're in, is it growing or dying? Is it cannabis and EV and energy, or is it automobiles and whatever else is dying, okay? Number three, now, which is kind of what we're getting to in the next minute or two, we're talking about company analysis. We're going out in the sectors that we like with a worldview that's bullish, and we're saying we're picking the best companies that have high volatility. Number four, we look at the setup of the analysis. What I mean setup, I mean, are we getting good ROI on that company? And then number five, we're looking at the price action and the technical analysis. I'm talking about this because if you do it backwards, I think you're doing it wrong. And hedge funds and proprietary traders will agree with me, not with you. Technical analysis comes last, not first. That's all I'm saying with this, okay? All right, if I've done great, make sure you hit like, subscribe, bell. You can give a tip by looking into the description below. I'm also going to give out some Discord chat invites. You guys can continue to chat with me there, as well as on here. But even when it's not live streaming, give me a second here to make this for you guys. Okay, this is how you can stay in touch. This is how you can mingle and match with your fellow traders. And we're giving this away free during the live show. There you go. Go ahead and click that. Stay up to date with us, and let's go start looking for deals. So I've actually got a couple for you today. I have an option scanner myself. I had this custom made. You can use Tastyworks, not Tastyworks, sorry. TOS, Thinkorswim, and you can use barcharts.com. They both have good scanners, okay? We found VX, Vaxart, clinical stage biotech. I might look at that later. Mara, I've already done many trades on them. I stopped because I had too much Bitcoin exposure, but I'm going to make an exception today. I'm going to talk about that in a second. RIOT is one. AMC, I'm not going to do. It is too much of a meme stock. I'd love if somebody told me that the fundamentals were this amazing and that it deserves to be at that price, but I don't know if I'd believe you. Blink, I'm not going to do because it is a charging network, a charging station network that competes with Tesla. I have big shares in Tesla, so I'm not looking to compete against myself. I'd be betting against myself, sort of. Basically, I'd be diluting myself from Tesla. All the money that I put into Blink, I could just be putting in the Tesla, is what I'm saying. Jumia, this shows up every single week in my scanner. This company is always on fire, always high volatility. It did really good. When did I start? Maybe November? September, okay. Anyway, the price was really low. Yeah, see, even in November, the price was down here in the teens, the tens, jumped all the way up to the 60s. I'm glad I'm not selling puts there. And it's come back down. It was at the 40s. It's settled at the 30s. But this is basically the Amazon of Africa. This is like the Amazon of Africa. but I do not understand that market. I do not understand the potential of that market. I do not understand the dynamics of that market. They are losing. They are a growth company. They're losing money quarter over quarter. They're losing between 30 and 47 million per quarter. They have 304 million in cash on hand, which means they have many quarters. Basically, right now, I'm giving you guys the very fast fundamental analysis, okay? Guy Red says, I am in Jumia for 4 months, rolling, good premiums, fantastic. Good for you. Let's see. By the way, it took me forever to figure out how to quickly do my basic fundamental analysis. I'm giving that away to you guys absolutely for free today, so do make sure you like, subscribe, tip, share with your friends, bell, and all that other silly stuff to see my videos. Anyway, they have 6.5 quarters before they'd have to borrow money or dilute shares with their current cash on hand. If it's over a year, that's good. If it's under a year, that's bad. I'm teaching you guys very quickly how to do fundamental analysis to save you guys tons of hours of time, and it's because that's what I had to do. No one was really teaching me. I had to figure out a lot of this stuff myself, okay? Take the total liabilities down here, 131, divide it by the total assets, 355. This tells you that they've got 37% debt on the books. Anything below 70 is good because they can go to a bank and continue to borrow. Anything above 70 is bad because banks don't want to borrow to you anymore. They do not want to loan to you anymore. They would have to either issue shares or file bankruptcy if they really needed more money, okay? Or look to get taken over. So anyway, if you want to do, by the way, this is the bare minimum of fundamental analysis, but is the fastest, quick version. You can use wallmine.com. I don't make any money from this site. They should pay me. They should sponsor me. Okay? I don't know if they can afford to yet. No, I'm sure they could. It was just a joke because this looks like it's not growing anymore. When I say bare minimum, if you're really doing your fundamental analysis, it should take you 8, 10, 12, 16, 20 hours to do it, or find a way to compress it. It's up to you, okay? But if we're talking about real fundamental analysis, it takes a lot of hours. It's not just this. It's looking at the news and all this other stuff. But this is the skim level. Like you go through and you do this. If it doesn't meet the requirements that I just talked about, debt to asset ratio, cash on hand ratio, okay? If it fails those, you skip it and you move on. Jumia is something that we could continue to look at. We'd at least add it to our watch list. I just don't understand the market because I'm not in those countries. So, that being said, I found 2 stocks for you guys today. I'm going to be putting on trades. I've actually already put the trades in Tastyworks. So here, if we look at RIOT and we look at my scanner results, scanner things, I'm looking for over 70% pop. I'm looking for over 4% a month, an ROI. That's 4% in 30 days. Doesn't have to be exactly 30 days. We have a 25-day contract here, okay? And we're looking for what I call cost basis distance, also known as break-even percentage, also known as downside protection. I want to write a book on this, downside protection. One of the most important things I think that you can possibly look at, and nobody else seems to talk about when doing the wheel, downside protection. Also, can think of it like your discount. What this means, let's look at it. RIOT is currently trading at $41.83. If you sold the $35 put expiring May 28th, $35 put, you're about $6.83 out of the money to start with. Then you would get $2.37 in premium just off of the bid. You might get higher than the bid, but we're going to calculate on the lowest possible price that you get filled right away. Okay, you're going to have a cost basis of $32.63. So if you own shares, you would not own them at $41, you would not own them at $35, you would own them at $32.63. So what do? We take the current price, $41.83. That's actually yesterday's after market price, before after market price. It's actually a different price now. But you take the stock price, you take your cost basis, you take the cost basis first, $32.63. You divide it by your underlying price, the stock price. That gives you a percentage that you invert. That is your discount. Okay? Invert, you just take the 78, you minus 1. or you just do the math in your head, okay? It is a 22% discount to today's trading price if you were to get assigned shares. So think about it like this. If you put in a limit order to buy 22% below today's trading price, it would be the same thing. It would be the same number. And you wouldn't get paid for it. Your money would be locked up. It would sit there. It would do nothing. It wouldn't be at risk because it hasn't bought anything yet, but it would be locked up because it's a limit buy order, okay? And you would get nothing in 30 days if the price never went down. If instead you sold the put, if the price doesn't go down, you would collect 6.7% in a 25-day period. This is why this strategy is so amazing and why I want to teach it to all of my friends and family so that they're not doing limit buy orders, they're doing put sells, okay? You're making money until you get the stock at a discount. You're making, let me say that again, okay? I want you guys to really hear this and get it in there. You are making money until you get to buy the stock at a discount. It is the fantastic strategy, okay? So, I have this report put together. RIOT, these are the trades that I've put in this morning. We'll see if they get filled. RIOT, currently trading at 41.83, expires. That's the option contract. May 28th, $32 put. Make $1.49. That's 4.6% in 25 days. That is a 63% APR, 62.95, almost 63%. And then it breaks it down for you right here in the report. It tells you we are selling the put at the 32 strike. Okay, FORUR. Okay, we'll check that out in a second. We're going to collect $1.49 in premium per share for a max profit of $149. And don't be scared when you see the max loss per contract. That is what we would own the shares at. It'd be $30.51. That's a $10 discount, $11.30 discount from today's trading price if we ever had to take possession of the shares. Would that be so terrible? This is a 27% downside protection, drawdown safety, 27% discount from today's trading price. I already looked this up. It is a 77.7% probability of profit. That is before your fundamental analysis. Remember, we don't throw our fundamental analysis in the trash and just trade on numbers on ROI. We get to add that to our probability of profit. This is why I'm doing this trade today. High probability of profit, high ROI, good fundamentals. As long as Bitcoin stays up, this stays up. That's the risk you take with this trade. It is a Bitcoin related trade, okay? But I want exposure to Bitcoin. I just don't know how much I want, okay? 4.66% return on investment in 25 days. If you were to repeat this every 25 days, not realistic, but you do this to compare it to other stocks, that's a 62, almost 63% APR. Mara, similar thing. Trading at $36.78, we're selling the $29 put. We're collecting $162 per contract. That's 5.6% return in 25 days. That is a 75% APR. So this Mara trade is higher APR than RIOT. So it's apples to apples. It is a higher ROI, better trade, okay? This gives us 25% drawdown safety, 25%. That means the stock has to fall 25.5% before you start losing money. If you were to just go buy the stock today and it dropped 25%, you'd lose 25% of your money. Does this make sense? Johnny, please tell me you're listening and this makes sense to you. This is why the wheel strategy is so powerful. Okay, and then it tells you in the report what this company is, where they're headquartered, what their phone number is. Okay, if you guys would like copies of these reports, Wayne, this report is based on the closing price on Friday, so it will not match. It's not a live scanner, unfortunately, and not a live report, unfortunately. Okay, yep. What was I saying? I forget what I was saying. All right, let's continue moving forward. I've already put those trades in. Oh, if you would like free copies of this report, just join the Discord that I put in the chat room, okay? We'll be giving these out once in a while as we find these trades, okay? Now, let's go look at more trades. It's 9:15. Wow, we're spending way too much time on this today. Sorry, guys. Let's go look at some more stuff. FOUR. Are you going through earnings on RIOT? Yes. Yep. Sometimes this time I'm making the exception. Oscar asked a great question. Normally with the wheel, you want to avoid earnings because there's either a big upside or big downside. I don't expect anything bad out of earnings. They're directly tied to Bitcoin. I haven't done the math on them recently, but as long as Bitcoin is above $6,000 per coin, then they're turning a profit. However much more it is, they earn more profit. So I'm not expecting anything bad on earnings. Bitcoin is right back up to 50. What? Let's just double check it. I think it was 55 this morning on the Bitcoin. We're looking at 4. No, I don't want to look at Kodak. I want to look at 4. Shift 4 Payments, Inc. Okay, this is the one that Guy was recommending. Wow, 5.8%. No, it's probably about 7% at the money. No, it's not that high. Okay, I thought it was higher. Okay, Bitcoin up to $58,610, up 10% over the last 7 days. Not above 60,000, which was our latest all-time high, but still really good. So I'm not too worried about RIOT and Mara, and I want to earn some premium. Okay, 4. Guy, tell me what you're looking at on this one. I know you're usually looking at credit spreads. Earnings are May 6th. We got 3 days before it. Let me jump on Wallmine for that one, and then we'll jump over to Wayne's as well. Wallmine, FOUR. Okay. Wayne was saying, oh yeah, we said RIOT is at 43. You're right, and we probably won't get filled because it's up $2 in the pre-market. Okay, so we might not get filled. You can adjust your strike down lower if you want, or good strategy, put it in, wait an hour, then adjust. Market's gonna be topsy-turvy for an hour. If RIOT goes back down for an hour, you'll get your strike filled probably. Can't promise anything. Okay, I'm just gonna put it in at bid. I'm gonna wait and see, and then I might adjust it or manage it later. 2 weeks out, you're going through earnings with a credit play. FOUR. Let's go take a look at that. By the way, now is the time, guys, if you have any stocks that you want me to look at, if you have a trade, an option trade, if you think you have a good company and you want me to see if there is a good option trade or a wheel trade on it, now is the time to type out that information into the live chat because we have 13 minutes before it's time to go. Yep. 85.90. So he's doing the 85.90. So he's buying the 85, selling the 90. You're going to earn $100 for every $400 you put at risk. That's good, but you're going to be out of the money 90 versus 96. 90 divided by 96.5. You're out of the money 6.7%. So if the stock goes down 6.7%. Let's look. Actually, by the way, when you're doing put spreads, make sure you click on curve, click analysis. Excuse me. And see where you end up. You end up basically at 89 before is where your break even is. So we take 89 divided by 96.5. You're going to be about 7.8% out of the money, 7.8% downside protection. You're making $100 for every $400 at risk. You're going through earnings. I'm not sure I like this one, Guy. Okay. Wayne says, so you do not chase a trade. Yeah, sometimes I do. I'm not going to lie. But if I'm going to chase it, at least I'm going to wait until the market opens and see what happens. There's so many times I put in a bid order because actually, let's go back and look at RIOT real quick. We've talked about it. I've recommended it. Do your own due diligence. It's not recommended for you. Not financial advice. Disclaimer, disclaimer, disclaimer. I think we just forgot to show the disclaimer today. Was it not there? It's in the other slide. Okay. Disclaimer, disclaimer, disclaimer. I'm not a broker. I'm not a broker-dealer. I'm not a financial advisor, tax advisor. I'm not a politician, thank God. And you have to make your own decisions. You have to be responsible for your own stuff. Don't listen to me. I just teach strategy. I'm not teaching you guys what to do. I'm not teaching you which trades to put into your account. You got to make that decision. Sorry. I'm going to look at the RIOT. We were doing the $32 put. We were doing 25 days out, $32 puts. I gotta clear that. I don't know how that was in there. I wonder if that was messing up the numbers in any. Anyway, so look at this. We've got a 19-cent spread on the 32. Now, we came in at bid, so we're already 19% below the ask. The mid is $1.58. Now it's already moved up $1 something in the pre-market. So, you know, we might get filled at bid or we might not get filled at bid. There's still a pretty, I'd say, fair chance. I don't know, 40% to 60% chance we're going to get filled because we came in at bid. Actually, I squeezed out mine a little bit. But if you put in yours at bid, I'd say there's a 40 to 60% chance you'll get filled when the bell opens or within the first 10 minutes or first hour. Hard to tell. We'll just see what happens. And if you don't get it and it moves too far away, you just got to recalculate your numbers, okay? Like let's just do that now for hypothetical purposes, okay? For those of you guys watching, because I know we got a couple new people. I'm sure Wayne can figure this out. Wayne's super smart. But normally we did 1.5 divided by 32, so it's a 4.6%. You were happy at the 4.6%. But let's just say, let's pick $1.10. It goes down to $1.10 at the 32. Now you're only getting a 3.4%. I would probably not do the trade because it doesn't meet my goal of making 4%, okay? Other thing you have to consider, at $1.10 versus $1.50, you're giving up 40 cents of downside protection, so you'd have to recalculate that as well. Now, when you get good, I'll tell you, when you get good, you don't have to sit here with a calculator. You can kind of do it on the fly, okay? But it takes practice. Just an hour a day for, 12 months. This stuff will be super fast for you. And then you're using the calculator to re-verify rather than to figure it out. I jump in the stocks and I already know, oh, this is 4% at the money, or this is 8% at the money. I can get this place. You can start to do it really fast, and then you're just using the calculator to re-verify. Guys, we got 8 minutes before the bell opens. Now is the time. If you have any trade ideas, if you have any companies you want me to look at, now is the time to share it, and we will go looking for it. Okay. Guy was talking about 4. I don't think it means the cryptocurrency. All right, by the way, what do you guys think about the mini camera in the bottom right now that we finally got that working? Do you guys like that, or am I too ugly and I should just take it off? All right, 4. Shift4 Payments provides integrated payment processing. I like that. Technology solutions in the United States. Its payment platform provides omni-channel card acceptance and processing solutions. Thank you, Johnny. Including end-to-end payment processing for various payment types. So there's a bunch of companies in this. Shift, Square, all these other guys. As well as tokenization, risk management. So they do tokenization. Okay, that jumped out at me that they do that. Fraud prevention, Lighthouse 5, cloud-based business intelligence. That becomes a bit of a word salad. So they do mobile online payments, integrated payment processing, yada yada. I think the first question I'd want to ask, because here's the thing, right? Wayne says still bullish on space. Yeah, now that we've come back down in price, I did that video on the space, how to get free shares. Okay, if you guys are new to the channel, you might want to go check that out. Has any bad news come out in space? Should I reconsider my space position? Anyway, if you come click on, you got to click on my icon, and you come click on videos. You'll see all the videos that we got. By the way, you guys can learn a lot by watching these replays. They won't be relevant for you to put trades on per se, but going through the motion of analyzing and finding is really good in there. And today we didn't use scanners and stuff like that, but in the other videos I do. If you come here, I talked about Virgin Galactic, why I think it could moon in the next, in May, basically this month, right? And how to get free shares using the wheel. Free shares is a bit of a clickbait. I don't mind saying that. You're basically buying shares with the premium is what I'm saying. Okay, but do check out that video if you're interested. I wanted to check news on, since you brought it up and you made me nervous, I want to check news on space. Wayne says still like TNA. Okay, cool. We'll check that out in a bit. Blah, blah, blah. Virgin Galactic gains as market dips, blah, blah, blah. A lot of these are super clickbaity and made by programs. What you should know. Should you buy? Should you sell? I hate these articles that don't have any real news. Why you should buy? Why you should buy? Should you buy? Blah, 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 blah. All right, doesn't look like there's any relevant news that's come out recently. such as a rocket failing or pushback of a launch date. The only thing that would scare me about space at this point is if they push the launch date back again. If they did that, I'd try and close out my positions early. I don't know, it has a current bid of 221. If investor was to sell the open put contract, they're committing a 2 number also collect premium. I could write these articles. I mean, this guy's basically taking my information and writing an article. I wonder if that's the same. I'll have to go look at what I did mine at. Space. I sold the 25. He's recommending the 22. I did the 25. He's just $3 below. When did I do the 25? That was the old one, right? Space. No, it's 25 days. Sorry. I was like 25. That doesn't add up for some reason. I did the 18 and he did the 22. Okay. And then you can see I also did the 21. Basically the same article doing the same stuff that I do. Blah, 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 blah. I can see if I can write for that channel. Anyway, guys, we've got 4 minutes before the bell opens. If you haven't done it already, hit like and subscribe, because when that bell opens, you guys are going to be too busy chasing money to think about like, subscribing, and belling. I really hate YouTube making that bell. That bell thing really annoys me that it exists at all. If I subscribe to a channel, I want to see the videos. I don't need to click a bell after I subscribe. TNA, direction shares, exchange traded, train fuss daily, small cap. Okay, so you're trading ETF. Small cap bull. You're doing, wait, Wayne, is this right? Wayne, are you doing a triple leverage ETF on your wheels? All right, Wayne asks, on your CSPs, are you a 30 to 45 DTE person? Wayne, I thought you sit through enough videos. I don't actually look at DTE. I know everyone else does. I look at POP. To me, DTE, by the way, for those that are new, DTE, for when you're selling options, is basically an estimation of the percentage of the chance that you are going to be in the money, but it's inverted. DTE refers to the buyer. So if you buy at 30 DTE, you have a 30, this is the idea, you have a 30% chance of being profitable. So if you sell, you get the inverse of that. You get 70%. So to answer your question, Wayne, I look for pop definitely higher than 60, always higher than 60, but I really like to be between 70 and 80. So 70 and 80 would be delta 20 and 30. Wayne says, I have a TNA 521 $70. $70, way out of the money. Okay, and that's 521, so that's another month out. June. Am I doing this right? June 21? No, it must be May. Sorry, May. Sorry, I'm counting my months wrong. May 21, $70. 70 cents. Yeah, it's like you're 1% on the money, right? And you might have had a different premium. How many days have you had this open? Or what was the premium that you got on it? So 0.74 divided by 70, that gives you 1%. Should be, I mean, theoretically, pretty low chance of getting there. Let's do some TA on this. TA on the TNA. Woo, that is a rocket. Look at that. That is a rocket. So if you came back here at the 69, that's where you'd be at. There's not really, I guess if you look at this, you could consider your support levels at the bottom of these candles. Is there a way to make this bigger, this chart bigger on Tastyworks? Anyway, so if you look at the bottom of this candle and consider this a support level, you got support sort of at the 75 range, so you're another $5 out of it. Got 97 cents on this. Cool. Investing teacher says, nice analysis. I wish I had time to do this, but students are coming. Got you. Oh, excuse me. Got you, brother. Market opens in 30 seconds. Quickly, guys. Like, subscribe, bell. Stick with us. Stick with us in the future, even if you get busy or get distracted by the bell. Boo, 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 boo. Gotcha. Anyway, I might check out this TNA stuff later, see which stocks are in it. What do we got going on? Whoa, okay, so I put the Mara in at 157, currently trading at 120, so unlikely to come back up and get filled at that. If we were to chase that, what would happen? We'd be getting 120 on, you notice I did some spreads here as well. All right, we did 152 on the 32. We'd be getting $1.07 on the 32 instead. We'd only be getting 3.3, so I don't want that. Over here on Mara, we did 165. Instead, we'd be getting 112. On the 29, we'd be getting 3.8. That's close. That's really close to what I want. So I'm going to right-click this one. I'm going to do similar order. And I'm going to play with the numbers here and figure out where would I be if I did $1.20 divided on the 29. That gives me my 4%, but I'm not moving into a different sector. If I'm doing crypto, I really do want to get the 5%. Stock at 3.5. Oh, okay, look at DTEA. Okay, cool. Let's check out DTEA. David's Tea. Interesting. New earnings coming out June 21st. We've got some time before that. $1.45 at the 5. Not a lot of strikes in here. Open interest is 202,000. Strikes are $2.50 apart. It's only trading at 331. Okay, we can't even look at this because it's out of the money. Yeah, I don't like doing this type of stuff with so few strikes. You're only getting 5%. You're only getting 5 cents at 2.5. I don't know why you'd want this. Am I looking at the right one? DT. Guy asked, do you trade plug? No, I've never traded plug. I've avoided it. Bit of a meme stock to me. I see it talked about too much, actually. So when I see a stock being talked about too much, yeah, this is why. Right? It's already been through its pump and dump. So I avoid AMC, GME, plug, NEO, anything that's crazy. I avoid anything that's crazy popular. I don't want to wheel something that's crazy popular. So 13 cents on 250. Is that a 2% return? Wait. Oh, you got 5% return? Nice. Good job. GME. Yeah. Wayne, I'm not going to do GME. Don't even talk about that, man. You know, I got some people helping me with marketing. They want me to make videos on GME, and I'm like, no, please. But we might have to do it. We might have to get some sort of attention. Might have to, you know, do videos on what's hot. That's what, by the way, for you guys. I'm glad you're laughing, Wayne. I'm glad that was a joke and you weren't being serious. Guys, please be careful listening to these FinTalk, Reddit, bimbos, and himbos talking about these pump and dump stocks that are like, that's the stuff you want to avoid. That's so subjective and it's so much pump and dump. You want to be going out and finding new stocks. You want to be using scanners. You want to be finding trusted sources like me. No, but you want to find trusted sources of real people that make real thinking decisions and aren't just riding these waves. Viac, you talked about Viac before. Viacom. Wow, Viacom went up a lot and came down a lot. And then it's had a little bit of a pop and then it's held strong. So it could be coming good. I wonder if I should ever look at income versus total liabilities and figure out how that plays out. So you take 810 divided by 36,607. They're getting 2% versus their debt every quarter. It's an interesting thing to think about. I need to think about it some more. I don't normally look at that. 33,607 divided by 52,663. 70% debt. Yeah, so I don't like that one. Yeah, guy says the crush is because of the collapse of that hedge fund, which was Apocalypse. No, I forget what that hedge fund was called. Yeah. Apexion or something like that? I forget what it was. Anyway. We are 5 minutes after the bell. We've got 11 viewers, but only 6 likes. We've had how many viewers total today? Looks like we've had 48 people join or go back to the beginning and join. Yeah, thank you. Hit that like button, guys. Hit the like, subscribe, bell, share it with your friends, put it on Twitter, put it on OnlyFans. I don't care. Just get people here. Oh, I'm giving out so much great content. You guys know, I'm being really serious right now. The amount of time and money that I'm saving you from courses and figuring out this stuff on your own, it's hundreds, if not thousands, probably thousands of dollars worth of money. Plus, then you multiply it by the amount of money that you can make doing the wheel every single month. And you're getting it absolutely for free. And all I'm asking you to do is like, subscribe, tip, and share. It's okay, it'll work out in the end. I believe in giving, and then stuff comes back. And we get good tips, we get good ideas from other people. It's all about growing the community, it's about sharing the information, and good stuff will come later down the road. I don't need it all up front. Oh, let me just check out some other stuff off screen here for you guys. Let's bring in our friend Thinkorswim. It has some stuff in the scanner. We've got NBev. I keep looking at them. I'm interested in them. Co-Diagnostics. That was one that I liked to do before COVID. COVID ruined all my biotech plays because everything got super pumped up. It was like the sector pump and dump with COVID. Clovis Oncology. Oncology's cancer, right? Applied Optoelectronics Inc. Let's take a look. Let's take a look at Zynga, then NBev, and then the biotechs. So Zynga, we've looked at these before, but let's just keep looking at them. Walmart has this problem that sometimes it doesn't let you type in the search bar. Okay. I really hope Walmart stays alive. I like their website, but it doesn't seem like they're fixing and improving stuff. Feels like a startup that's running out of money or something. Chester says 6-minute delay based on your bell sound. You mean you guys are hearing me 6 minutes ago? I don't think other guys are hearing me 6 minutes ago. Chat seems more relevant than that. Archegos, yeah. Archegos is Apocalypse. All right, Zynga up only slightly. We found some support at the 980, which we found previously at 980, so that's a double check. Could be head and shoulders-ish. Just looking at the TA, which you shouldn't do first. All right, but losing 52 million a quarter. They turned negative. Wow, they turned negative in 2020. They were profitable 2018, profitable 2019, then super negative 2020. They've actually got good debt ratio. Cash on hand means they can lose money for quite a long time. Let's say they lose 100 million because it looks like they're trimming their costs now. They're probably firing tons of people. All right, let's say they're losing 100 million a quarter. Oh, that's 15 quarters. They can survive 15 quarters at 100 million a quarter of losses, and they've got 50% debt. Okay, let's go take a look at some options on Zynga. Revenue quarter over quarter is growing now again, 52%. Institutional owner, wow, it's so high. 85% insider institutional owner combination. Zynga is another tech stock though, not really moving out of a different sector. If I'm going into Zynga, I'm going into entertainment versus Bitcoin and stuff. High IV around May 28th, but earnings come out in 2 days. Blah. And All right, stop moving on me, table. Come on. There we go. All right, so let's take a look at this. If you get 35 cents at the money of 10.50, you're only going to get 3.3%. So Zynga doesn't have enough setup. Right, the setup's not good on Zynga. For those of you watching, learning how to wheel, if you're only getting 3.3% at the money, you're not going to get 5, 6, 7% out of the money. Oh no, come on, space. That's what I should be. I should be managing my positions now, huh? All right, 21.43. All right, let's take a look at our positions, especially space. Yeah, we're down 70 cents at the market open. My old put was 26 before the Richard Branson betrayal. And then I've got puts at 21, 20, and 18. But I collected 276, $1.43, and 60. So you have to calculate your break even. Those of you guys who are learning, the put isn't as important as the break even. So I've got almost $3. Basically, I'm at 18 on most of these. As long as space is above 18, I'm pretty much safe. And then, yeah, buying the call, $60 call when they were back at the 40s and 50s, thinking space would actually launch people into space. All right. So now we're going to start managing our positions. First thing I want to look at is things that are in the money. See how far are they in the money. If I can close, roll, how many days left to expiration. So for those of you watching, AI, I have a $65 put. I have 2 of them. I'm okay owning the shares if I have to on this one. I still have 18 days to expiration. So I'm not going to roll this. I wouldn't want to roll until we get down below 10 days to expiration. I could close this early if, okay, why would I close it early? Because I wouldn't lose any money. I basically could break even or lose only a little bit of money. And so I'd want to go look at the information, look at the news on AI to see if anything happened to AI that would change my perspective on them. And if I suddenly went from bullish to bearish, then I could close early and not suffer any losses. But otherwise, I want to let it play out. I want the trade to just play out. That's the strategy. Because stocks move up, they move down, they move all around, they go up and down like kids on a trampoline. So our goal is to not panic early. All right, let's look at C3 AI. Any major news that's actually changing the company direction? They just signed a contract with somebody. That was April 12th. There's not a whole lot of news on this. At 9:43, starting to feel a little bit tired. All right, guys. Let me know if you guys want me to look at anything. Otherwise, I'm going to manage my positions. Select C3 Enterprise Correction. Today announced that Yokogawa has selected C3 Enhance Enterprise AI applications and complement its digital transformation solution services for industrial customers. Multi-year agreement. Wonder if they'll give us any numbers about the size of the agreement. They're doing simulations for customers to improve operational efficiency. We'll take a look at AAL in a second. Is that flying stock? Is that a airline? Check it in a second. Yokogawa does industrial automation. Information control. Oh, it's a gas and oil contract. All right, so let's go take a look at AAL. American Airlines or Alaskan Airlines? American Airlines. Implied volatility is a bit low. I don't know if you can do much with it. Let's look at 30 days. You get $1 on the 21. 21.5, sorry. Hey, you get 4.8% at the money. You might get 3% out of the money. Yeah, I mean, you only got $1.50 downside protection to the 20, and you're only getting 2.5%. Of course, they're never going to go bankrupt, right? They'll keep getting bailouts until the cows come home. Countries don't like to lose their airlines. CLX Clorox. Oh, okay, cool. I don't have any chemical in my portfolio. And 265 at the 177, so we're looking at put spreads instead of wheels. Especially because you're only getting 1.5% at the money. Ugh. Wow, this bid-ask spread on the 167 is crazy. Let's count that at 50 cents maybe. So $1.30 minus 50, you want to get 80 cents credit. Why is the bid-ask spread so crazy on Clorox? Clorox should be a major company. And strikes are going by 250s. They're not small strikes. We only got one open interest on the 250 though. Anyway. Whoop. Currently trading at 178. If you did my quick little put spread, you could get break even at the 169. Gives you $10 of downside protection. You'd be making $80 on 170. Anyway, let me know. You're the put spread expert, Mr. Guy. You let me know what you would do on Clorox. Let me just continue reading on my position here in C3 AI. Upcoming events. That doesn't seem to list any upcoming events unless there's this. Okay, so May 11th, they're going to a tech summit. May 24th, JP Morgan Technology Conference. May 8th, Bank of America Tech Conference. Those should be drumming up new business. All of that should be positive events for AI. So I don't have any reason. I couldn't find any. Okay, excuse me. So on AI, as I'm managing my position, I couldn't find any negative news on this. So I have no reason to switch my bullish perspective to bearish. So even though it's down $2 in the pre, I'm going to let it ride. Also, I have a break even of $60.60. So we're still $3.20 away before that. And then I have a crazy spread on that one. Anyway, moving forward, ARCG is down a little bit, but my puts are at 83, 81, and 76. My break-evens start at 81, so I have no worries there. And I don't mind owning shares in ARCG. ARC is a fantastic company. I don't care what all the mainstream media whines about. They're just pumping other hedge funds or whining on behalf of other hedge funds that pay for their advertising. ARCG is amazing. BCLI was a bad call from my friend. GRWG, how are we doing here? Okay, we're still above the break even on GRWG. We got 4 days to go. We are probably going to get a sign, but then I can just close early and keep the profit on GRWG. Hillian, trading at $10. I had an 8.5 call to get me out of the stock. I collected $1 on that, so I'm getting it out at $9.50, and it's currently trading at $10.21. That happens in 4 days. I'm happy to do that. Happy to get rid of those shares. I also not simultaneously, but I sold an $8.50 put. That should expire nice and worthless. And I'll finally be out of Hillian, which will be nice. INOD data. Still taking it in the wrong end on that one. Oh, that's not INOD, that's Inovia Pharmaceuticals. All right, INOD. Looks like I've got 100% profit on that one. I still like the company long term. I might want to go check at their news. I might want to free ride this. Maybe it's time to sell a covered call. Let's go take a look at INOD to sell a covered call on my free ride. What is going on? Where is the rest of my... Okay, never mind. Thought I had something else going there. All right. Currently trading at 630, 750 is out of the money. I could sell a covered call at $1.20. No, that doesn't make any sense. It'd be right at the break even. It'd be right at today's trading price. So you'd have to get it 65 cents. So you're really only getting 35 cents for selling a covered call at the $5. What is 35 cents out of 5? 7%. My cost basis is really low though. My cost basis is 3 something. $3.33. I'd be getting a 10% return. By the way, for those of you that are new, or those of you who haven't figured it out yet, when you calculate ROI on puts, you do it by the strike price. When you calculate ROI on covered calls, you do it by the price that you own the shares at, not by the ticker price, not by the strike price. All right, guy said he sold a put spread on Vail, the 18 and the 20 for June 18th. Okay, I got to decide if I want to sell a covered call on this INOD, or if I just want to wait for them to moon, or if I want to sell half and free ride 250 shares. Actually, looks like I missed the moon. I missed the pump. They were at 863 2 months ago. They were at 7 earlier this month, April 7th, earlier last month. That's the sound of me thinking. Sure, I want to sell a covered call on 2 of these. No one's getting filled at $1.65, aka you gotta add $1.23. So anyway, 1.65 minus $1.23, 42 cents. So we're not getting 42 cents. So I need to get 12 cents less. 1.65 minus 0.12. I'm too tired. 153. 153 is what I'm going to go at. And I'm going to sell 2 of them. Selling covered call, 253. Which account is this in? It's in my opportunity account. Okay. All right, that'll bring me an extra $300. And I might get some, if it gets taken away, then I'm basically just free riding the rest of my shares. If it doesn't get taken away, I make $300. Cool. All right, so let's go take a look at Vail, V-A-L-E. South American ADR. What is ADR? Do-do-do-do-do. 42% IV. He sold the June 18th, 46 days out, 38% IV. South American stocks. All right, let's crank up our volume a little bit. Gotta get some music, get some energy going. You guys let me know if this is too loud. I can adjust 2 different sliders on this. Diversified Metals and Mining, South American Mining Company. Doesn't give me the profile. Oh, it's diversified. So probably a bunch of different mining companies and a bunch of different metals. Brazilian multinational corporation engaged in metals and mining and one of the largest logistics operators in Brasilia, Brazil. is this? That is a weird icon or weird image for a company that does what it does. They're in mining, logistics, energy, steel making, and something else that I couldn't read in time. What do they mostly mine? They mine iron, they mine nickel, they mine copper, manganese, and coal, and phosphates. Nickel's really big in EV right now, and iron ore was going up. I like this one. I like the sector anyway. Don't know if I like the country. They seem to be having a lot of problems there. Vale is the world's largest producer of iron ore and pellets. Interesting. Rocks there are 67% iron ore content. Huh, I didn't know manganese was the 4th most used metal in the world. Things you learn. I mean, I like the sector. I don't know if I like the country. Well, let's take a look at this put spread. June, you sold the 20, bought the 18. I noticed that you put your sold the 18. You write your numbers 1820 instead of 2018. I think you do the, on a credit, you do the sell then the put, a sell then the buy. Anyway, I know what you mean, so it all works out. So we're taking in 89, losing 26-ish, puts us at 63. We have according to Tastyworks, a 60% probability of profit. We're making 63 for every 137 that we're risking. Chester says, you need manganese to make steel. It is a flux to blend metals in the smelting process. Yeah, that makes sense. Still didn't know it was the 4th most used metal in the world, but fantastic. Currently trading at 2018. You're only getting a couple dollars downside protection on this, if even. I mean, you're basically starting to lose money at $19.33. You're not getting much downside protection on this for a country that's so volatile. I'm surprised you're doing this one. Hey, Guy, why didn't you do like the 1917 instead of the 2018? Because then you'd be a little bit further out of the money. Because the max profit's only 37 versus 163 unless you get something else out of it. 24 to the 76 if you did 1918. Your pop goes up a lot though. Alright, look at EWZ and see why I'm comfortable with Brazil. I've been selling put on EWZ for over a year. Yeah. iShares Brazil ETF. $1.30, you can basically get $1.20 probably at the money. 3.3% on an ETF. Up, da, 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 da. Yep, nothing but up. Wonder how much price action chart matters on a country that could invert its government. Pretty sure price action doesn't matter. Let's just check the news for Brazil. I have a hard time investing outside of America for American companies. COVID battleground in Brazil. Thousands rally for Bolsonaro despite Brazil's COVID crisis. 400,000 deaths. Guy says, much safer than space, if you ask me. You might have a point there. You know, but here's my thing on space. Whether or not they make their test flight in May, and I hope they do, for the short-term action. Space has so many engineers and is tackling such big problems that they're going to have tons of spin-off products, I feel. Whenever you get that many engineers. Same thing that I like investing in Tesla. Like, yeah, Tesla makes cars, but they're also AI, they're also energy, and they're really, really good at bringing in tons. Hey, we got some fill on my covered calls, and I got 2 cents extra out of it. Nice. But my thing with basically big engineering companies with a ambitious goal and mission that are solving really big problems, they're going to invent stuff along the way, you know. As they make rockets that go into space, they're going to create some sort of pump or some sort of window or glass or metal or something, and then they can turn around and spin that and sell it to some other industry and make millions and millions off of just that. And so any company that's constantly hiring the best of the best engineers, and most importantly, where the best engineers want to go work because they're doing something amazing, right? Engineers want to solve big problems and be a part of some big solution. They want to be somewhere amazing. Whew, Tesla's taking a dive today though, down $13.64 again. Now I'm not feeling too bad about selling my covered call on Tesla. I wanted to lower my position or earn some premium. Then, of course, as soon as I did that, Tesla is a huge bubble. I actually disagree. I've watched over probably 200, maybe close to 300 hours on Tesla. Tesla is not a huge bubble. It might be temporarily overpriced, but definitely not overpriced over a 5-year horizon. Happy to disagree on that one with you. All right, guys, it is 10:03. what am I gonna do? I'm gonna recommend that you guys like, I'm gonna recommend that you guys subscribe, hit the bell, share this with your friends, very important. Also, the Discord invite is still in the, I'm gonna post it again. There's a Discord invite. If you guys like this channel, you wanna keep this information going, talk to other traders, join the Discord channel. I'll also post some free reports of the stocks that I am trading in there, okay? And very important, share this with your friends. Share this with other people on other social medias. If I do it, sometimes I get banned and I can't do it in that channel anymore. You're not allowed to self-promote in a lot of channels, but you can promote me, and that's the best way that you guys can help me right now. I've given you guys, believe it or not, thousands of dollars worth of information that I could have charged you a course for, right? And instead you got it free on this channel. So find a way to give back so that I can keep giving to you guys. Let's grow this channel. Let's grow this community. Let's make this a really cool, popular thing. Yeah, that's it, guys. I will see you on Wednesday. Have a beautiful morning. Good luck. Happy trading. If you have any more questions or ideas, post it in the Discord group and I'll take a look at it. Cheers.